The stock market in 2021 has already wrapped up with a solid performance overall despite the pandemic. Now, as we enter 2022, people are wanting to know more about the stock market and how to gain profit from it. If you're watching this video, you might be one of them. However, learning about the stock market can be confusing, and with how things have turned out so far, you might regret not getting into it earlier. But what if you had a framework that can help you navigate throughout your stock market journey? In this video, I'll be sharing 5 strategies that I and the best investors in the world, such as Warren Buffett, Cathie Wood, Carl Icahn, and Bill Ackman, use to surpass other investors and win in the long run. Welcome to Empire Investing, where we'll be sharing the latest in stock market news, technology, and innovative investment strategies for aspiring millionaires and billionaires. If this is your first time watching our channel, please do consider subscribing to see more videos just like this. And now let's get started. Number 1. Handle your emotions. One of the most common mistakes of new investors is not being able to handle their emotions. When 90% of investors see their stocks go up, they get excited. They celebrate with their friends and show off how much money they're earning in the stock market. They check their stocks every day and sometimes even by the minute. And then when prices go up, they become very happy. But when they go down, they get discouraged. Buffett says, quote, "You're dealing with a lot of silly people in the marketplace. It's like a great big casino and everyone else is boozing." When you enter the stock market, always remember to handle your emotions. In an analogy by Jordan Peterson, we should be the reliable ones at a relative's funeral. Putting it into context, when the prices of a stock go down, you shouldn't sulk in the corner just because you lost some money. You should celebrate because it means you can buy more shares for less. Buy low, sell high. Every time the prices of a stock go down, see it as an opportunity to buy more shares. The more you buy every time the prices go down, the higher your returns are.
Investors behave in very human ways, which is they get very excited during bull markets and they look in the rearview mirror and they say, "I made money last year, I'm going to make more money this year, so this time I'll borrow," and when they look in the rearview mirror and they see a lot of money having been made in the last few years, they plow in and they just push and push and push on prices. And when they look in the rearview mirror and they see no money having been made, they just say, "This is a lousy place to be." So they don't care what's going on in the underlying business, and it's astounding, but that makes for a huge opportunity.
Number 2. Invest in what you know. It's one thing to learn about the investments you want to get into, but if you want an edge over other investors, you need to invest in areas that you are already familiar with. Look at the areas in your life that you know well. If you're a young person, you could look into gaming, artificial intelligence, social media, and technology. If you're someone a tad older, you could also look into businesses that have already matured, such as food, travel, wine, and automobiles. Take a look at Buffett, for example. His strategy is to only invest in mature business models that he knows well. He invested in See's Candy, which sells sweet products and has been in the industry for the longest time. He picks the companies that he knows will stay the longest, and you should be using this same concept when you invest too. Know what you own and know why you own it, Peter Lynch. Before investing in multiple sectors, make sure to invest in businesses that relate to what you already know and you see will become a good investment long-term and lead in the future.
That evaluating that company is within what I call my circle of competence. I understand what they do, I understand the economics of it, I understand the competitive aspects of the business.
Number 3. Learn the game in advance. Let's say you invited a person off the street that doesn't know how to play poker to play a poker game with you, and you each placed a $100 bet on the table. The odds are the person you invited will lose because they don't fully understand the game yet. Now let's apply the same concept to the stock market. If you enter the stock market without any knowledge first, you'd probably lose more than you'd expect. Learn the game and know the basics before you invest. You have to know about the common terms used in the market, such as Number 1, a PE ratio or price to earnings ratio, which is the ratio of a company's share price to the company's earnings per share to know whether a company is over or undervalued. Number 2, return on equity, which is net income over shareholders' equity. It's a way to measure the efficiency of a business in profit generation. And number 3, market order, which is an order to buy or sell a stock at the market's current price. Number 4, there's also a limit order, which is a limit in which you buy or sell a stock. And number 5, stop limit order, which is an order once the price has reached a specified price or quote-unquote stop price. Before investing, make sure to have an understanding of different fundamental terms and strategies that you'd need to use, such as a Warren Buffett strategy, value investing, buy below intrinsic value. There's also the dividend aristocrat strategy, which is a group of stocks that you can beat the market long term by dollar cost averaging. These are just a few terms that you need to know about the stock market. By getting to know these terms and tactics, you'll have an advantage over the investors that don't understand these important concepts. Number 4. Don't focus on the short term. One of the simplest rules in investing, but one of the hardest rules to follow, is don't focus too much on the short term. At the beginning of your investing journey, you'll probably check the news of the stock market every day. It's easy to get excited over every single piece of news about the stocks you're investing in, and there's nothing wrong with checking the news in the stock market. However, it may cause a negative effect on how you invest. By simply just looking at how the stock market performs in a week or in a month, you won't be able to see the long-term patterns that will be evident after a year or so. Don't worry about the price of a stock when it goes down one day and then goes up the next day. Focus on the long term. If you believe in the business or businesses you invest in, you shouldn't have to worry about the daily performance of your investments. Number 5. Know the market cycle. The stock market cycle is probably one of the most important things you need to know about the stock market. It refers to the trends or patterns that emerge during different markets or business environments. Take a look at this graph. In the early to middle stages of the market cycle, transportation, technology, capital goods, basic industry, and energy are doing well, reaching the market top. This is because as the economy expands, these are the things that are most required, like transportation. This is what happened to Netflix, Tesla, and Amazon. If you had invested 10 years ago during the early stages of its market cycle, you would have gained a lot of profit. However, in the later stages, you see the likes of consumer non-cyclicals and healthcare work better. It's mainly because, despite the downturn, these are the businesses that are needed by people. People need clean water and healthcare. That's why during this stage, they are safer to own. Before you invest, you need to know how market cycles work. You need to know which stocks will do well during which stages. No matter how strong the stock is, if it's in one of the weak sectors, you can lose. The road to investing is tough, but if you start from the basics and don't let your emotions get ahead of you, you'll be able to navigate the waters, especially this coming 2022. That's all for today. Do you have any more investing strategies that you'd like to share with us? Join the discussion in the comments below, and if you enjoyed the video, please click like and that subscribe button. We'll see you guys in the next video.